the mic to you. Any kind of feedback that you would want to give so far. We are progressing slowly, but we are going into from a big macro level to the suburb level. And then next week we are going to get into start doing our due diligence at the suburb level. Okay, Jonathan would like to say something. Hang on 1 second, Jonathan. Okay, I've unmuted you, Jonathan. You can say something.
Hi, Amber. Can you hear me?
Yes, I can hear you.
Oh, good. All right. Well, thank you very much for having us or having me. We're looking forward to. I'm doing a bit of a catch up on the first one, but I did attend yesterday's webinar. Very, very interested to basically start this course, and looking forward to the bright future.
Fantastic. Jonathan, we haven't seen your introduction in the closed Facebook group for the 12-week webinar, 12-week mentoring group. So post that there.
Yeah, I'm catching up on the.
If you are looking to partner with somebody, let everybody know. There are already 3 or 4 people who have expressed their interest that they would want to get together and do a project together. And the thing is that everybody will have to put a project report together by the end of 12 weeks and present it to the investors and present it to the rest of the people in the class, so that in a way that it basically shows that you've mastered the content that we discussed. And I'll give you feedback on the report, and all the students will give you feedback on the report, and that's how we learn.
Sure, excellent. Now looking forward to that.
No worries at all. Anybody else would like to add something or say something? Okay. We still have a few people still joining the class slowly, but because it's already 7 o'clock, so I am going to continue from where we left yesterday. So yesterday we were discussing about doing different kind of searches on the internet on the growth potential in Victorian suburbs, or growth potential in suburbs in Sydney and Melbourne, Brisbane, Adelaide, Perth, whatever you want to put in there, and urban renewal projects and things like that, just to be able to find out where everything, what suburbs are popping up. Is there anything that that stands out? Why does it pop up? Is there anything else going on in that area? And things like that. So this is going to be your homework for this week. I'm pretty sure that nobody got any time to do anything from yesterday, because I know that I didn't get any time to do anything else. I just went to work, came back about an hour ago, and here I am. So these are certain economic updates. I'm sorry it has this thing, otherwise I would have got them. It has this transition setup, which I didn't know that was working on it. So if you want to find out things about economic update, you can go to Westpac, ANZ Live, QBE, LMI. QBE is a big insurance company, and all builders in Victoria, once upon a time, well, up until 1st of July actually, they were being vetted by QBE. So the main insurer underneath for all building company was VMIA, but all the application went via QBE. So QBE looked at, and they published their own reports as well. So let's go back here. And HIA, as we discussed yesterday, so I'll keep going with this. The next one was government infrastructure spending. So if you wanted to find out, all you do is Google stuff, but there are certain websites like Economic Development, Victoria Transport, like we discussed. I think this is all, we've already discussed all of this, so I'm going to keep going with this. If you're from Queensland and New South Wales, there are different sites over there as well. So as part of your homework for this week, it should be that you want to find out where all the infrastructure, new infrastructure is going, or where the government has committed spending in your city or in your area. Please do that. And as I mentioned yesterday, look for expected timeframes. For example, start dates, completion dates, type of project, new school, new train line, new activity center. What kind of areas would that have an impact on, and will it create jobs? So these are the things that you wanna. Okay, Ashley hasn't got. It was actually sent in the same email that I sent to everybody. Guys, just give me 1 second. I'll make sure that Ashley joins us today. I'll just shoot him an email so that he can. Sorry guys, I'm just shooting him the link to this webinar so that he can. I'll just get out of this and copy and shoot the email to Ashley. So it was all sent in the same email. There were two separate links, and I said copy registration link. Come in and join. Okay. All right, we can continue with this. Ashley will join us shortly. I've sent the Jonathan. If you could let him know that I've just sent him the link to this webinar so that he can join. There were two separate links in the same email for everybody to join. Government infrastructure spending. This is we've discussed this. Another thing that we always look for is new store openings. So, say for example, is there a new McDonald's opening somewhere? Is there a new KFC coming up somewhere? Subway, Muffin Break, Gloria Jeans, retail giants, Woolworth, Coles, supermarkets. So, and if you want to ever find out where they are opening next, go to their websites. Go to Bunnings.com, Woolworth, Coles.com, IGA, Westfield, and shopping centers, Stockland, if Stockland's working on something. So anytime there is new stuff that's coming in, you will find that a lot of people, the areas around it, that means people have already started doing some research around those areas where they can where they've already done the research that there's going to be population coming in, or there's going to be some sort of a growth happening in that area. So these companies spend a gazillion dollars every year just on this research, just to study the demographics where they're going, and all you have to do is just be a little bit smarter and just follow where they are going if you wanted to move if you did want to follow them to places where there's going to be good capital growth in future. So other suburbs are other thing is that you look for black sheep. What black sheep is, now I only have an example in Victoria, which was Clayton. Clayton and Victoria had a bad reputation in terms of and another one called another black sheep in Victoria is Frankston. A lot of people say that it's not good. Too much drug use, too many break-ins, and people don't want to see needles near the train station and all of that. So Clayton had that kind of reputation, but the train station at the train crossing in Clayton is now going underground, and there's a lot of work going on there. And Clayton has recently gone past the $1 million mark. Similar to that, if you remember, Brooklyn in New York used to be not a suburb that people would go to, but if you look at them now, those suburbs have actually been totally revamped, and you got to keep an eye on such suburbs where you think that these are not a good suburb. This is where all the bad guys live. so I don't want to go to that suburb. But as you see that the property prices in those areas start going up, you will see that it'll start pushing out the bad guys out of the suburbs. And more and more people who can afford that or who have a proper job will start moving in, and that's when you would want to get into those kind of suburbs. Lifestyle suburbs, close to coastline or close to the beach, close to golf courses, close to entertainment centers or stadiums. I, for one, operate in a lifestyle suburb. So I'm in the Bayside area where you've got Chelsea, Aspendale, Mordialloc, and all of that, and they are 100% lifestyle suburbs. They don't have, well, they do have a few schools, but not like very famous schools where people want to move into the area to be able to send their kids to that particular school. But we see a lot of people downsizing from Caulfield, from Brighton, from Bentley, people who where the property prices are even greater, or BlackRock, where the property prices are even greater than what they are in Mordialloc. And what they do is they sell their $2 million homes, and then they downsize right next to the beach because people love that kind of lifestyle. And that's the reason that I stay in those suburbs, because no matter what, there are still rich people in the suburbs that are ahead of me. Well, but they are closer to the city from these suburbs. But I know that these people will someday sell out, and they are actively looking to downsize and move over there. We also see people who go up a ladder in their socioeconomic status. For example, I've seen people from Frankston and Seaford who actually move up towards, so they can't afford Brighton still, but now they can't afford Mordialloc or they can't afford Edithvale, so they move up to a better suburb for better lifestyle. Sidekicks. Now, sidekicks are suburbs that are right next to a suburb that is just going spastic in prices. And a very good example of that in Melbourne was Glen Waverley. Glen Waverley just went crazy at one time, where property prices touched 4.5 million for big houses and 3 million. I mean, it broke a record that, property sold for $3 million in Glen Waverley right next to Wesley College. And then another one broke a record, and another one, I think the maximum one is about 4.5 million for a big 56 or 60 square home in Glen Waverley. So what happens is, so people move into Glen Waverley because it has one of the top 4 schools, secondary colleges of Victoria. So and you can't be you have to be living in the school zone to be able to go to that school. So a lot of people moved in that area, or they move into that area just to be able to send their kids to that school, because it's a public school, but it has a very good reputation because the results and cutoffs for the percentage that the kids manage to achieve are just through the roof, just out of this world. I don't know what they feed their kids, but apparently those kids do really, really well. So I'll give you an example here. This is Glen Waverley, but just up the road on High Street, you've got Wanturna. And after a while, what will happen is that people realize that, look, if I live in this area in the school, I've got to pay a lot of money. And sometimes even $400,000 or $800,000 more to be able to live in Glen Waverley. And very soon they will say, look, man, I can just live up the street and pay $300,000 less for the same amount of land, for the same size house. I don't mind living in Wanturna because it's just up the road. It's maybe 4 minutes extra drive for me, or 5 minutes extra drive for me. And that is when these sidekicks suburbs start to come up. So when suburbs like these who just go crazy in prices, you'll see that people will start realizing that it's not sane to pay obscene amount of money just to be able to live in Glen Waverley. I can live in the suburb right next to it and still enjoy the same amount of amenities, the same schools and same things. So you've got to keep an eye on suburbs that are right next to other suburbs that are doing really, really well. I'll give you an example. The Brisbane project that I did was in Windsor. Windsor was right next to a suburb called Albion. So the address of my development was 138 Albion Road, Windsor. But Albion, this one suburb up from Windsor, was a really posh suburb. I mean, everything was great, and we chose to do Windsor because first the address said Albion Road, which was, for us was really good, but it wasn't in Albion; it was in Windsor, and the development did really well. It sold out. Everything was great. So that's an example of going into a suburb right next to a suburb that's doing extremely well. Okay, this is how. This is just me trying to explain you the difference in different house median over the 5 years between Glen Waverley, which was the clear leader at one time, and then the suburb right next to it, Mount Waverley. This is where I live, in Mount Waverley. It crossed it sometime in December, and then went below it, and then currently is above Glen Waverley. And this has happened only because Glen Waverley just went out of reach for a lot of people. Now, Glen Waverley still has a lot of 50, 60 square houses that are $3 million, $4 million, and those people won't sell them for anything less than that. But that charm or that steam sort of run out of Glen Waverley because people started to move to places like Burwood East or Wanturna, which are the suburbs that are right next to Glen Waverley. So the other thing that you can follow is all the major developers. Where are they developing? What kind of... so these are the websites of all the big developers, and you can check them out. You'll get the PDF for this by the end of this session with the recording and everything. But this is for you to check them out and see where these guys are and where are they developing next. So they will always have a showcase of their projects or the projects that they've completed or the projects in pipeline or coming on the market or current projects and so on. So you can see where they are developing. Most of the time I've found that these big companies, they specialize in moving land. So they do a lot of house and land packages because house and land packages first require a lot of money, and second they make a lot of money on that because the land is land, and only massive big companies with that kind of potential to be able to hold land for such longer period of time and then make money from it, it's possible. But for most people, developing hectares of land is a little bit out of the reach. But if they are developing, for example, I remember Stockland, was it Stockland or Mirvac? I think it was Mirvac that did a development in Wanturna, which was like an infill site. So if they are moving to Wanturna, it has to tell you something that, okay, and Wanturna was a suburb right next to Glen Waverley. So if they did a development there, hang on one second, I've got another email, Edward Khan. Okay, anyway, so those people sometimes do infill developments as well, and I know Mirvac does a few infill developments. You can also find out where other mining companies are building or buying or expanding into. Although I never follow mining companies, they are just there for an extra bit of information if you wanted to, because I'm just a little bit wary of where mining is happening. So now we're moving into the next phase where we now have to understand how all the statistics work, what are all the stats for the suburbs, and what do they say and what do they mean. And this would be part of your homework when you start doing your research. So understanding statistics, your homework would be to go through your list of shortlisted suburbs. So everything that we did yesterday and a bit today, and you searched the internet and you found stuff, you would have shortlisted some suburb. even if you didn't follow the way I was teaching you, or you already had 4 or 5 suburbs in your mind that, that's the suburb that I want to work on, or this is where I live, I want to find out what's going on in my suburb, because where you live, you find out these things. It's just easier, so you can verify them a lot quicker. But find out some suburbs, do some research in your area where you want to work, and see what the stats come out to. So what are the stats? So we'll just start going. You also have to, when you list them, find out why you listed them. If a news site said that XYZ suburbs are going to be the top best suburbs, try and find out why are they saying that. Is there any infrastructure going in there? Is there any other spending or train station committed to that area? Is there a zoning going to be changed in that area, and so on? And find out which are the ones that fit your budget. Use the calculator. It was put in Facebook yesterday, that you can download, and find out what's there. Okay, the median price. Everybody knows what median price is. I don't really need to explain this in that much detail, but I'll quickly run over this. The median price is the middle of the market. It's not the average. It's not the top below, but it's the middle of the market. So the reason the median price is used rather than the mean is mainly because it is more accurate indicator of the market, as it reflects the sample size being used. The only drawback to that is that the median price would change month after month. If a property like in Glen Waverley, a $4.5 million property sold, the median price would shift, because that higher price would actually pull the median price up. So because it is right at the middle of the market. So for this reason, it's better to view median prices over periods of time and monitor the trends rather than looking at 1 month's figures in isolation. So never look at the median price for a particular month. Look at it over a period of time. There are more people who can buy $350,000 house than there are people who can buy $950. Target suburbs with lower than average median prices within metropolitan cities, that is looking for cheap suburbs next to expensive suburbs. So that's what I was explaining earlier, that we look at suburbs which are right next to certain suburbs that have gone very expensive, but there are suburbs surrounding that area which are still not that expensive. We have discussed this. Rental yield, measure the cash. Rental yield basically measures the cash an investment property produces per annum as a percentage to the property value. So that's pretty simple. And that's just the formula of the property value, weekly rent, and it gives you 3.56% yield. But the net yield is basically you've got to deduct all the outgoing expenses from the gross rent, and then be able to get to the percentage. So when you start comparing, you'll be able to see, okay, gross rental yield for every suburb, which will be that. And then you got to figure out, okay, what are you going to pay for property management? What are you going to pay for insurance? And some minor upkeep for the property, you allow a certain percentage. And then you'll be able to see, okay, what's the net rent that I'm getting in that area? I would really want to find out the net rent in Melton. If the gross yield is 6.3, I would say the net would be close to 4.5 or 5%, or so in that area after you take out all the expenses. So if that's good, and that means the entry point is low, it'll be good. But Melton, over a period of time, has done really well. Rental yield, what does the rental yield tell us? A higher rental yield means that there is more demand from renters to live in that suburb in relation to the supply of rental properties available in that area. So if a rental yield in a suburb is higher, we got to remember that means there are more people who want to rent in that area. That is why the rental yield is high. This could mean that eventually that suburb could experience a high capital growth due to market correction. So when a lot of people want to live in a certain area, that's why that area is giving you a higher rental yield. It basically means the capital growth is just about to follow, and we'll get into that in a few slides as well. Demand is exceeding supply. Enjoy good rental while waiting for capital growth. Planning to develop and hold. This could be a good place to search for a potential development site. So if you wanted to do a development and then hold it, I would want to do this in an area where there's higher rental yield, because not only have you supplied certain properties to the area, you'll be able to enjoy a better rental yield, and then you know that capital growth is just about to follow that. So important. If a suburb becomes desirable, renters are the first to flock there. So if a suburb looks really good and people want to live there, you'll see that more and more people who just want to rent the property in that suburb will move there. And if a suburb is desirable, capital growth is just around the corner. High yield precedes capital growth, excluding mining towns. So all this that I'm saying does not apply to mining towns, because the economy of that town is actually dictated by that one mining company. Now, this stat alone is not a true measure, and your decision should not pivot on any one factor or any one stat. When selecting a suburb, you must look at various other factors and look at the suburb in totality. Historical data shows that generally, if a suburb shows greater than 5% rental yield, it will soon experience capital growth. So that's what the capital growth is all about. So if rental yield is high, so in some suburbs I saw in Adelaide yesterday was showing 7% rental yield. So that basically tells me that in that area, eventually there's going to be a good capital growth that will come in there. So if I was in Adelaide and I wanted to do a development, I would target those areas and understand why the rent is higher over there, and then go and do a development in there, and then maybe sit on it. So by the time your development's finished, usually in Melbourne, if you haven't got a DA, it takes about 24 months to finish a development, and in 24 months you'll see that capital growth would have caught up with that higher rental yield. Caution: if it is cheaper to own versus to rent, this should ring alarm bells. Happens all the time in mining towns. This basically means that there is a large majority of renter who are there for a limited time. Ask yourself what will happen if they leave. So if it's cheaper to own versus to rent, that's what happened in mining towns, where people went and bought properties for 400, 500K and then rented them for obscene amount of money, which was $1,000 or $1,200 a week. And you should know that it is only going to happen for a very limited amount of time, because those people are there only for a short amount of time. So because that kind of rent is not sustainable, so they are there for whatever they are doing, and then they'll be gone. And that's when people that's what happened in mining towns, where everybody started flocking there. And I remember in I think Pilbara region, where the property prices just touched 1.2 million in a mining town, and then everything just collapsed. Vendor discounting is when asking price less the sale value. So I keep asking that, I'll sell my property for 1.2, but eventually when it's time to sell, I end up settling it for 1.1. So that's what vendor discounting is. Very simple, straightforward. If vendor discounting is greater than, say, 7%, buyers have an upper hand. Sellers are discounting from their original ask price. So what you got to remember, that if the vendor discounting for any area is greater than 5% or 7%, you decide, looking at an average, and see if it's more than. So that's why in the homework you'll be comparing these stats for different suburbs to figure out that, okay, in XYZ, in suburb 1, the vendor discounting is close to 2% or 2.5%, but in suburb 2 I see that the trend is about 3.5-4%. Why is that happening? So if it's 3.5-4%, that means that in suburb 2 the purchaser have a better negotiation power to get a better deal. A higher vendor discounting means a decrease in demand or oversupplied market. So the greater that vendor discount is, it basically means that there is a decrease in the demand for that in that area, and the market is oversupplied. Capital growth is too far away, as the oversupply has to be consumed first. The lower vendor discounting, the higher the demand. A lower vendor discounting means that vendors are not ready to budge from their asking price. This means that it is a seller's market. So these stats, we all understand what they are, but what they actually mean is what you need to understand, because as we go further and we start collecting all this sales data for suburbs, these are the things that we should be looking at, and then comparing between different suburbs to understand what is happening in the market. And if you keep a tab on these things, you'll suddenly realize that, gosh, in the last 3-4 months the vendor discounting used to be 1.2, but now it started to jump to 2.5, and that should be a good indication that the market is getting oversupplied, or they're asking too much, or it's going to lose its capital growth very soon. Caution, it does not mean that there are opportunities in the area. The suburb could be overhyped, a positive sign, but you have to be cautious about this. Days on the market, everybody knows what it is. It's the time that it takes to sell a property after it comes on the market, and you should know that if it doesn't stay on the market that long, that means property in that area is hot. So greater than 90 days on the market, that means the demand is low and the market is cold. But less than 50 days on the market, that means higher demand and the market is still hot. We also look at auction clearance rates. Is the percentage of auction properties that are sold in an auction. What we hear is like an average auction clearance rate for all of Melbourne or all of Sydney. What you want to do is get into the auction clearance rate by the suburb. If you don't know, then what you need to do is get in touch with some agents to get this data, or just ask them casually, what was the auction clearance rate in this suburb? So they will tell you from their perspective, but they usually have access to property data, which is the I think is the real estate Institute of Victoria or Queensland and everybody. I think there's a national one as well, where all the data by all the agents is reported to a central body that governs all the agents area. So what does ACR tell us? ACR of 75% generally means higher demand. A low ACR, on the other hand, could mean lower demand. The higher the ACR is, the higher the demand is versus the supply. And avoid getting into the market at the peak of buying frenzy. So keep an eye on the increase in the auction clearance rate of your shortlisted suburbs. So you don't want to get into the market when it's showing an auction clearance rate of 80%. Unless you have looked at the property clock and you know that it has just started to come out. And if it has just started to come out, the auction clearance rate would be going from 60 to 65 to 62, or coming up from 50 and going on. But when it's really, really hot, that's when it's about 80% plus. You also have to know that the property guru Terry Ryder, he runs a site called Hot Spotting, and he has a business where he sells all these reports for different kinds of suburbs, the cheap suburbs or the expensive suburbs, or suburbs with best rental yields, and suburbs that developers should avoid, and all of that, and based on some statistical data that he does. He said that auctions account for a tiny share of the residential property sales, and are mostly at the upper end. They say nothing about the mainstream market where the bulk of the sales occur. So all these things you need to know, because if you're from Queensland, as I said, only 50% of the properties end up in the auction, and most properties are sold privately. So over there, auction clearance rate would not mean much. Stock on the market, without the percentage, is the number of properties for sale in a specific market. So a stock on the market percentage, however, is expressed as a percentage of the number of properties for sale versus the total number of properties in the location. So if a suburb has, I don't know, 500 properties and 50 of them are for sale, so stock on the market means up for sale is about 10%. What it tells us that the higher the stock on the market, that means the market is oversupplied. Everyone is selling, but everyone wants to sell, but no one's buying, because that is why the stock stays on the market. If the stock is being absorbed fairly quickly, then you know that the area is hot. That suburb is doing well. People would want to move there. Look for stock on the market percentages between 1 and 3. Greater than 3% is equal to too much supply, and less than 1% is equal to you better have a closer look at this suburb. So, but this has changed from one of the sites that I used to get this data from, which is a free site. They've changed their algorithm, and now they show them in percentages like 5% and 10% and so on, and which sort of makes sense if the suburb has 500 properties and 50 of them are on the market. Online search interest that you can find out from realestate.com.au as well, and we'll go through all the sites as well. You've got online, it's basically how many number of people are actually looking at a listing in that area. So that would look something like this, when you go to like supply and demand in Glen Waverley, this is 42 people looking per property, 22 people looking per property, which is average of Victoria. So they compare what is the average for all of the state, compare with that suburb, and you'll see whether or not what kind of demand it shows. From this calculation, you can see that if demand is strong and supply is low, the OCI will be a larger figure than if the demand is weak and the supply is high. For OCI to exist, there has to be properties for sale in a market. A market like this should be interpreted as a good market, not a bad one. It's just that the supply is too low that a figure can't be determined. However, if there are no properties for sale, how do you invest in such a good market? Conversely, if the number of searches is 0, this is a bad market. Even if there is only one property for sale, the online search interest will be 0, the lowest it can be. So the higher the online search interest, the more demand for the property compared to the supply for would-be buyers searching online. So what you have to do is not look at just one property. You have to look at the online search interest for a suburb and compare that with the online search interest for other suburbs and see how many people are looking. That gives you an idea of the demand for that suburb. Vacancy rates is a measure of how many rental properties in a location are currently without a tenant. And two figures are needed to determine the vacancy rate: the number of rental properties and the number of properties that are vacant. Very simple. If there are 200 properties, you divide it by, and you know that there properties and 4 of them are vacant, then the vacancy rate is 2%. And what does it tell us? Generally, a 3% vacancy rate is considered normal. Greater than 4% is time to walk away from the suburb. That basically means that that area has become investor dominated. So all the investors are in there, all the developers are in there. They are developing and buying it, and then there are no people who would want to live in that area. So that is why we did everything that we did yesterday, to be able to choose a suburb in the first place where people want to come in and live. So if you follow everything that we discussed yesterday, you can't end up with a shit suburb. You can't end up with a suburb where the vacancy rate is through the roof, or or the suburb's not attractive enough to other people. So everything that we've discussed so far is slowly edging you towards a better selection of the suburb in the first place, so that when you do a development, even if Kim Jong Un fires a missile, that suburb will still be livable. So that's what we want to do. So we do not want to be speculating in too far away areas. You can do that when you are strong enough and you're established enough. You've got a few developments under your belt, and you know that you can weather the storm, or you can ride out the wave, or whatever. But when you're starting off as a developer, you want to do with your selection, you want to be so stringent. I haven't even got to the due diligence on the site and the due diligence in terms of financial feasibility and everything. I'm planning. So far I'm just planning so that I win the game no matter what suburb I choose. And if I follow the steps that we discussed yesterday to actually shortlist certain suburbs where no matter what happens I'll still come out on top, and if I have to even hold something, I should be able to rent it, then you can't, the chances of you making a mistake, you are mitigating that risk from the very onset. So yeah, 2% is good, but anything less than 1% means that there will be a hike in rental prices very soon. So those are the things that you need to know. That what do each of these percentages mean? Anytime you look at it, I would recommend that, although they seem very simple, but we tend to forget what they are telling us. Everybody know, oh, the vacancy rate is this, but what we forget is the fact that 2% is good, but anything less than 1% means that there will be hike in rental prices soon. So this is the portion that we tend to forget when we are looking at all these stats about the property market. Proportion of renters. A general rule of thumb, 30% of property owners are investors. So if renters are less than or equal to 30%, is generally good. And I'll tell you where you can find all this data from. Therefore, suburbs with a lower proportion of renters will generally be more attractive than suburbs with a higher proportion of renters. So if you target area which has maybe 10-20% rental market and 80% is owner occupier, you're going to do well because it's an owner occupied suburb. So what you make would be people who want to buy their own homes will always be there in that suburb. Therefore, suburbs with a lower proportion of renters will generally be more attractive than suburbs with a higher proportion of renters. Owner occupiers between 60 to 70%, which is the owner occupier market. Too much renters, too many investors. That means the market is investor driven. Now imagine if you were in a market that was investor driven, what would have happened? Because APRA has just put the brakes on all the lending for investors especially, and it's not that bad really. If I look at in the market, properties are still selling, and I see banks are still lending. In fact, I just got a refi on one of the property that I'm going to settle on, which we are building, which is just 2 weeks away. And I combined to free up some equity and everything, and I got 80%. And bank did it, and it's a top 4 bank that did it, and I've not had any issue, and I don't have a 9 to 5 payslip. They know what I do. They fund all our developments and everything. I had to give them a projection of what are the projects that we already have in the pipeline and everything, but we did get the finance, so it's not that bad. as people get to know. It's bad for people who wanted to borrow more than 80%. So what happened was that when the interest rate was so low, every Tom, Dick, and Harry said, "Oh, I want a piece of property. I want a piece of property." And they went on with the lender's mortgage insurances. They went and borrowed 90%, 95%. That's just stupid. You don't get into a property market where you buy a property with 95% debt. That's just I don't know how do people do that. But having said that, those people who did it in the past came out on top because the property market kept going up. And it's just I would call it destiny. That if you're destined to get something, you will, no matter what. But also, no, I would never do that. I would never get into a property where I have to borrow 95% just to buy that property, unless I know there's an upside coming, or I can do something which is in my control to realize that upside. But even then, with 95% debt in this climate, I would stay away from it. I wouldn't even want to borrow 80%. Now I freed up my equity by getting an 80% LVR, but that doesn't mean that I'm going to take all of it out and put it in one single project. So that is there so that if I need it, I can use it. I can use a bit of it as a buffer, but it's available for me. So if I don't use it, I don't pay any interest on it. Understanding capital growth. This is now over here. I would ask you to, I'll discuss some of the theory aspect of this, but there is an Excel spreadsheet which is available in the online course. So if you see the online course, you should all have access to this. So if you go in here, which is understanding capital growth, I'm discussing the first one here then I'm going to explain what they are, but I want you to watch this video and this video. Whoops, is asking me to log in again. So and there is an Excel spreadsheet that you can download from here and follow the video what I do. And this is a very practical exercise, but it'll but it'll enlighten you. Some things that anytime we think this is more from an investor market, and you would do this exercise when you finish your development and you want to make a decision: do I keep it or do I sell it? Do I hold it? What do I do? And we will discuss more about it towards the end of the course when you are setting up your automatic property acquisition machine of your plan of action, how you're going to do, what you're going to make, what you're going to target, and so on. But for the time being, this is part of your homework. I would want you to log into the online course and watch video 2 and 3 because I am going to because if I just discuss the same thing here, there's no point. But this portion, but everything that I've got on the slides here, I will discuss that with you right now. Okay, so we've got capital growth happens on a national level and a local level. And for example, new mining venture, everything, there's a sudden spur, there's sudden growth in that area. Or a new development that happens that changes the appearance and attractiveness of an area and starts attracting a totally new demographic. So say for example, if there is no train station in an area and they put a new train station in an area, you'll see a lot of people who want to move there because now they've got a place where they can catch public transport to work every day. What total return is, what you got to understand on a property is actually made up of the capital growth and the rental yield that you enjoy. So everything that I'm discussing here in theory, I have tried to explain that to you by actual numbers and formulas in the Excel spreadsheet in the online course. So if you watch that video and download the Excel spreadsheet and see what I'm talking about, it'll give you a better understanding of this. So on the theory side, I'm going to discuss that here. So because the natural interplay of supply and demand that causes people to move or dwellings to be built also reaches a point where the cost of rent or purchase is greater than other similar nearby areas. This is what we discussed in Sidekicks. And the only exceptions are mining towns to this. This is all about everything that we've been discussing so far. Long-term relationship between rent and capital growth that allows investors to determine what is going to move next. Just like when we were discussing stats and what they mean, we were discussing that if the capital growth pushes prices up, we know that rents will fall, and investors push up the rent and owner-occupiers push up the prices. So if owner-occupiers start moving in an area, they're going to push up the price, and if the investors start moving in an area, they're going to push up the rent. That's what happened in mining towns, where all the investors started moving in and started buying property for $500,000, $600,000, and then renting it out for $1,100, $1,200 a week. It is likely that the rents will increase in future more than prices, and landlords catch up only when the lease is up and the tenants leave. So what happens with rent is that they're always playing catch up, because if somebody's in the already in a lease, the landlords can't actually increase the rent. So they can only increase the rent when the lease is up. And different properties would have different dates when the lease is going to be up. And how can you measure that? You can compare the long-term capital growth and rental return versus more recent performance or the last quarter. And if the relationship between rent and prices is not in harmony, the one lagging behind is likely to catch up. And that's what we were trying to figure out when we were looking at the stats, that as I mentioned, that in Adelaide we saw a suburb that has 7% rental yield, and that means, wow, you're getting 7% return, which is pretty good, because these days you can't get even 2% in a bank. So 7% on a property is pretty good. What it tells us is that capital growth is lagging behind, is about to catch up. So that's nothing but the same thing that I'm trying to explain from the capital growth's point of view. Especially if annual average total return is less than long-term annual average, then total return. Rent versus capital is the long-term, which is 10-year annual average total return is greater than recent years. Yes, then capital growth or rent increases are likely. Has the number of sales been falling or rising over the year? Yes, capital growth is likely, and if no, there's rental return is likely. So there's a relationship between that. And if prices are high, rent increases are likely, and if rents are high, price increases are likely. So we all know that, when a suburb where the median value for a townhouse is 1.2 mil, and the rent over there for houses is 450, that rents are going to go up very soon, because the landlords over there are hurting, because they bought a property that's 1.2 million, that's giving them a return of 2%, with $400 a week or something. So you can expect that the rent's going to push up in that area. And if both are high, neither are likely to increase. And that's exactly what's happening in this suburb in Melbourne, Glen Waverley, the same suburb I can give you an example of, where the prices for townhouses have reached 1.3, 1.4 mil, and the rent for those prices and the rent for those townhouses is also $650, $700 a week. Now, how many people would pay $700, $800 a week? And I can tell you right now, not a lot. So if both are high, neither are likely to rise. Rent versus capital growth, rental return. If rents are static but prices fall, rental yield will go up. If both fall but prices tumble faster than rents, rental yield would rise. These are not that difficult concepts to understand, but you just, every time you look at these things and you look at the higher rent or higher yield, you know what's coming next. So where do we get all this data? We can get all this data from realestate.com.au. There's a website called Residex. You can get data from CoreLogic. And you can also get data from that API magazine, which is the Australian Property Investor magazine, which, by the way, has actually gone into liquidation. So this, I need to change this. This is from my old course when the magazine was in circulation. I think the property has gone into liquidation, and the site's down as well. So they used to publish this data at the back of the magazine, and it used to be just this data for every suburb in Sydney, every suburb in New South Wales, Victoria, and all the different states and everything. And I used to buy that just to be able to get access to this data. It wasn't in a spreadsheet or anything, it was just printed, but apparently they've just gone out of business. So what else do we look at in a suburb? We look at the demographics, the population, the income group, average income, average age of the people who live there, to be able to understand whether there's an aging population, or there are young families, or there are singles, so that when you do your development, you can design it to the percentage that is the most. So there's no point designing reverse living, where your lounge room is on the first floor and your bedrooms are on the ground floor. Even if you've got beach views, if the population in that area is over 60, but the most of the population in the area is over 60. So although they would love the views and everything, but they would not buy it, because most old people would not want to climb up the stairs, or unless you are making apartments where they can catch a lift, or a wheelchair can actually go up. But if you do an apartment, the building codes will make sure that you put wheelchair access in it. So we look at average household size, vehicles per household, owner occupied, renter occupied, and we look at all different data sources, and we'll do that now. So in terms of population, we look at whether it's increasing or decreasing, or why is it happening, and it happens on suburb level. And I'll show you some sites as soon as I'm done with the slides. I'll show you some different websites where you get all this data, and then you can put this data together as homework for the next class. Population, for example, people are downsizing from more expensive suburbs and then moving to another suburb. What does that tell me? They are cashed up after downsizing, could very well pay a better price. Their age group would then determine the design of the building, townhouse, etc. that you intend on building. Average income would help you determine what you can sell your units or townhouses for in that area. So if there's not a lot of migration happening from different suburbs into your suburb, you can figure out that, okay, the average income in this area is, I don't know, let's say $6,000 or $7,000 a month. Then you know that you can create a $800,000, $900,000 townhouses, and it should be okay. Owner occupied, rental yield would be comparatively lower because people want to live there. Renter occupied, more people on rent means more investors own the property in the area. Why does that happen? Because they are there. So these are certain data sources now. So let's go into and look at these different data sources for all the things, and then we'll come back to validating signals, which is your homework. So okay, this is at the end of the class you will get I'll give you the links to all these sites. I've already got a PDF which has all the links, and you can start your homework, and you can even search for more links. If you find a site that's not on the list, please do share it with us, or shoot me an email and I'll discuss it in the next class, or put it in the Facebook group so that other people who are there, if you find a new site. The thing with these websites is that I've tried to find as many free sources where you can get this information and make an informed decision as much as possible. The only paid site that I use is Real Estate Investor, and the only reason is that I actually have tried RP data as well, and I found that RP data didn't have the current data, so that's why I canceled my subscription. I also use Cordell, that tells me about development pipeline, and we'll get into it when we start doing our due diligence. And I'll show you the access that I've got to Cordell and what it can tell you. So this is a site, it's called Invest Smart, and they have a property section, so you can go into Invest Smart /property, and you can put in your suburb. So let's say 3196, and you click on units. This is what you want to find out, so search, and you'll see, okay, 3196, Chelsea, Edithvale. If there are any other postcode that you guys want me to use, raise your hand and I can use that, or put it in the questions section, and I'll use that in the example as well. It's just that I'm more familiar with the suburbs that I operate in, so I use that. But there's no harm in trying out different postcodes from Sydney or Adelaide or Perth or Brisbane or anywhere from where other people could be from. So here it's telling me property type, it's a unit, and the median price, what it is, and the 12-month growth, and all the data. I can select on this and go and get the rental yield. So all the stats that we were talking about. Okay, we've got 3105 request. Let's go 3105. Search. And in that I can see that overall in the last 24 months it had been 16, but there's been a decline, which is Boolean, but this is rental yield, so I can look at the current median price. And I would suggest that you also do try out different sites and see for the same postcode and see what data you are getting from different sites, just to compare and see if there is a discrepancy. Now, all these websites are free, and although they all claim that the data is authentic and everything, and I'm pretty sure 99.9% of the time that data is authentic, because some of this data is free, because by law I think there's a list that comes out that you can get from Domain or somewhere that gives you the weekly sales or something like that. So you can order them by, and you can look at the house as well, order them by median price growth in the last 12 months. Click on it and it'll give you that. Or you can click on suburb search over here, put the postcode again, 3105, and do a search for any one of these criterias, and you can select different combinations of these to find out how they are doing. When you actually click on something, it'll take you to another page, and it opens a heat map. Again, this is the same heat map from it's a different heat map as compared to the real estate to the realestate.com.au heat map, but it also has a heat map that tells you, okay, these are the suburbs where the prices are really, really hot, and you can click on them and it'll give you the details that in for example, Mount Waverly, the median house price is 847, and year-on-year change is 14%, 531 sold. I'll just zoom in a little, it's too small for me to read. Annual compound growth in the last 3 years is 4%, and last 5 years is 6%. So you can move around and click on any suburb and it'll give you the details for that suburb. So this is just an area. If you scroll down, it'll give you different prices, the median price for houses and units, long-term trend, auction clearance rates, days on the market, discounting. So you see 13% discounting. What does that tell you? So So when we first searched Boolean, I'll go back here. You see 12-month growth has gone down 17%. And we just discussed this in theory that if the vendor discounting is quite a lot, that means the market is oversupplied. And that now correlates with the fact that this suburb's gone down 17% in the last 12 months. So that means this area is a little bit oversupplied at the moment. And Jonathan asked me to search for this. I'll just unmute you, Jonathan, and just wanted to see if you lived there. Jonathan, do you live there?
Next suburb.
It's the next suburb. Okay. So would you agree that
Yeah.
there is some sort of an oversupply happening in that area?
Yeah, I reckon. Well, the reason I choose that suburb is because it's also next to Bowen North, which is, pretty much the next suburb. That's what I thought. Okay, if the Bowen North is really overpriced at the moment, then the overlapping suburb would be Bulleen.
Yeah, but it seems that Boolean is oversupplied as well. So it doesn't mean that if you're right next to two really good suburbs, it could mean that you need to go a little bit further out. So what's further away from Boolean?
Well, Doncaster, that would
Well,
be
I
again
think
over.
that is again oversupplied.
Yeah.
So, but what this is telling us is the same thing. If the discounting is 13%, so there's another site that I look at. It's called the Boom app, and I have it open here. So let's go 3105 here as well. Sorry. Okay, we've got Boolean, Victoria. Let's look at Boolean units, which is this. That tells me 33. Look at the suburb stats. Well, this tells me a little bit different. This tells me 3% vendor discounting. So there's a mismatch in two different websites that are giving me the data. So which tells me that you need to find more data that is more comparative for this. So you just can't discard a suburb just because it came out to be 13% discounting. So sorry. So okay, thanks, Jonathan. I'll just unmute you, and we will go back to what we were discussing. So this site will give you all more data around country of origin. It's like a suburb, and all this data primarily is coming from ABS, which is the Australian Bureau of Statistics. So let's look at the same suburb here. So let's go to realestate.com, invest, Victoria, okay, and now you have to compare apples with apples and oranges with oranges. Now this side here just gives us discounting at 13%. Now I don't know if this discounting is for houses or is for units or it's combined. We don't know yet. So, but if you go somewhere here and type 3105 and select that, and we don't even know whether or not it's Boolean South or not. So this has a rental yield of 3%, and the median price is 828. Annual growth is about 10%, but we don't want annual growth. We want to figure out, compared to the same period 5 years ago, the median unit prices for 3-bedroom units increased 56.2%, which equates to a compound annual growth of 9.3%. And they don't have a data for last 10 years. They only have it for 3-bedroom units. What else can this site tell us? We've got for sale, sold, for rent. Rental yield is about the same as reported by this side, which is about 3%. I don't know, this side didn't report anything. So all this data is available, but if you were to go with the data, I would go with realestate.com.au over this side. although this site is not a it's not like a fluff site. This is a very popular site for investment, and it does more on the stock than on property, but it is available for you to check out. When you start doing your location analysis, so let's go back into our slideshow. So as per your homework, what you need to do is pick up the list of your suburbs that you've shortlisted, and you're gonna first do a location analysis, the kind of schools in those suburbs, the amenities like shopping centers, train stations, bus stands. You got to mark them, and distance from CBD. You got to figure out the demographics, who lives there, investor or owner occupier, the kind of demographics. You got to go and study the council websites for those suburbs that you've shortlisted, so you can understand if there is an infrastructure going in there, or there's an urban renewal happening there, or is council planning on doing something else. You got to compare the capital growth. You got to watch the 2 videos on capital growth and use that calculator from the online course section. You got to compare the demand and supply in that area. You got to compare all the stats. So you should have minimum 2 or 3 suburbs. If you got more than that, very good. But minimum 2 to 3 suburbs you must look at, because what will happen is you'll compare the 2 and then you'll say, nah, I won't go to that 2, and then you'll have to pick another 2. So it's best that you pick up 4 or 5 that you think are really good, and you can prioritize them. That look, this one I really want to go to XYZ suburb, and if that didn't work, I'll look at this suburb, and then number 3 I'll look at this one, and number 4 you can prioritize them and rate them that in the preference of your of the way you want to do it. So if you want to find out about the location, all you do is come back here and type Glen Waverley, and it'll come up Victoria, and it gives you a little bit of history about what Glen Waverley is. You look here, it'll give you the population, but this is based on 2011 census, so don't go after this. But the distance from or the location, for example, 19 kilometers from Melbourne CBD, that's not going to change. That will remain the same. And then you can look at, this area was first settled in the mid-19th century. Gives you a little bit of an insight into how that area came about. The Victorian Police Academy, which is a big landmark, and you can see it at quite a few places. How does the economy work in that area? So it's somewhat of a business hub in metropolitan Melbourne, with many international companies including Toshiba, Ansell and NEC, all having the Australian headquarters in the suburb. So now you know how the economy of that suburb is going, and I'll give you another side about that. So this is about the location. So you are looking at the location. So after you looked at the location, you move to demographics. Now this is the number 1 site to find out details about demographics. Now I'm not going to spend an hour on the site explaining you how it works, but I need you to get this URL and really spend some time on this, because it not only talks about the population or demographics, it talks about the population forecast for that suburb, the economic analysis of that suburb, the housing, how it's split, the kind of housing that you can have, and it can give you all sorts of reports as well. And most of it is, I would say about 90% of this website is free, but there are certain data that you have to get a subscription for, and subscription for this site you can forget about it. It's just too dear. I got in touch with them, and they charge, I don't know, $15,000-$20,000 a day, that if I wanted them to do a research on a total area, because I was looking at a 300 lot subdivision, and I told my partners that I don't think I have the data sources and everything to be able to do and pinpoint and forecast a population growth in this area for a 300 lot subdivision. So if you're serious about getting in, so even before we get in, I would want to engage these people to do a thorough research on demographics in that area. Otherwise, I wouldn't get into it. But this website is fantastic in terms of community profiles, population forecast. So let's look at it. So let's look at, this is the population forecast. So now here you can pick up data based on the local government area, which is the council. And you'll have to put your name, email, password, everything, and create a login to be able to access the data. But once you're in, it gives you everything for free. It is free. I've used it many times. If you want to see how to use it, again, there are videos on the online course that you can log in and see how to use it if you don't know how to use it. It talks about a lot of different things, and I can't stress this enough that the suburbs that you shortlist, you should pull out a report and really sink your teeth into it and really know the kind of areas that you are going to start operating. And you have to do this maybe a few times for different suburbs before you start developing. But once you start developing in the same, and you do another development in the same suburb and then another development in the same suburb, you'll realize that you don't really need to keep coming back to it. But every now and then it's a good idea to pull a report on your suburb. Especially, like I, for example, pulled out these reports based on 2011 census, because the only free source of data is ABS. Other websites have actually built their businesses by getting the ABS data and then presenting it differently. So we can use it and make more sense from it. Because ABS data is just so raw that it takes a while to understand what it's saying, and if you really need a different set of head on your shoulder to be able to interpret and derive any kind of meaningful information from it. It just spits out all this data in these tabular forms. But these websites and different websites that provide all this data, all they're doing is making it available in a way that is comprehensible. It's basically you can comprehend it. So yeah, spend a lot of time on this. It's a really good website. This is ABS. It's got census US data, census data, abs.gov.au. And this URL talks about community profile. So if you've looked at the community profiles in the previous website that we discussed, you don't have to come here. But if you wanted to, you could 3105. So we select that area, click on go, and it'll give me a general community profile that I can click on and download, and then it downloads. And then, as I was saying, this is what they do. So I have to come back here, then unzip the stuff here, and then double click on this here, and then try and make sense of this Excel spreadsheet that gives me all this data, which I have no time to go through or make sense from. So that is why I like it, but I don't have the time to spend on this. So you can go census again, and look at data and pictures. So you can click on this and you can select the state that you're from. So let's say Queensland, and you can see 50% female, 49% male, household income $1,200 in 2011. It was that 2016 has gone up. Now what we want to do is find out this data by suburb. So you can spend time on this and figure out how you can find out this area by different suburbs, because that'll give you a good idea of what's happening in your suburb. Search community profile. This is again the same thing. I'm not going to get into it. You can watch a video on this site as well. You'll get links to all of them, and you can then spend some time. You can also go to domain property profile and do the same thing, 3105, and search. Okay, it doesn't do the search, so I'll put my address. If you're in Melbourne, this is my address. more than welcome to drop by. This is an old house. I plan on demolishing it this summer and build a new one. So you can click on this and say, this is my details. Ooh, it tells you how much I bought this property for in May 2006. But that is also incorrect because I bought this in 2005, not in 2006. And it was rented for almost 7 years because I went overseas for 3 years and then came back and then didn't come back here. Stayed in Glen Waverley because I wanted my kids to go to a particular school, the school that I was talking about. And yeah, so this is again, you could put in detail. This is to search details about a particular site, and we can use this more when we start doing some research and start doing some comparables for our due diligence and for our financial feasibility. Now this is property data. There was another site here. Now here, property data, which is owned by Real Estate View. It has data for all states. And you can click on New South Wales, select the suburb that you want. For example, some of the doctors that we work in has I think about 10 acres of land in Box Hill in Sydney. And I'm actually up in Newcastle this weekend. I'll be staying the night in Newcastle this weekend on Saturday night because I have a meeting with the doctors that we work with, and they're all from Maitland. So I'll be there, and I'll be back on Sunday. So where is Box Hill? I'll just quickly go. Okay, it's not on this page, so maybe on another page. But why it's not here? But anyway, you can you can find out these data that talk about separate houses, semi-detached, flats, unit, monthly loan repayment, weekly rent. So this is a really good thing to know. What is the monthly loan repayment happening in that area? That'll give you an idea of the size of the loan that they might have. So if you extrapolate all of this for a 30-year loan, you would know that, what this is. And I've been trying to put together a calculator. I haven't been able to nail it properly. Is if I put in the average median value in there, what is the maximum property that they could buy? And the reason I have not been able to nail it properly is because I started off looking at all the different serviceability calculators from different banks, and then APRA came in and changed everything, and then I couldn't be bothered recreating a new one. But that's a good idea because when we're trying to target an area and we know that's the income that they make, median people, add 10% for the upper end of that market and subtract 5% for the lower end of that market, we would get a very good idea of what their affordability is. And from the other side that the id.economy, the site that I set for demographics, it has a section that tells you that if you're in this suburb, people are migrating from XYZ suburbs into this suburb, and if they migrate out of the suburb, they end up in different. In which suburbs do they move to? So do spend a lot of time on that site to get familiar with it. This is again Glen Waverley. These are just some planning sites. So this is in New South Wales, and the thing with New South Wales is that there are different council websites, just like in Victoria. But what I don't like about New South Wales is that they have a different council contribution calculation method. So it's not like a straightforward same method that they use. Every council has a different method of calculating stamp duty. Council contributions. So when we get into the financial feasibility, we'll discuss that in more detail. So this site will give you details about it. Now, Homely is again a site with suburb reviews. So what they've tried to do is put another spin of what other people think who live in the suburb. So it's like a social aspect that they've introduced to property data. And 3105 doesn't find anything. Okay, so let's click on Castle Hill. And it's great for safe and sound, clean and green schools, resale or rental value, shopping centers, and it'll give you reviews by other people, what they think. It'll have all the stars of what they think. It'll have some sort of a rating system. So what is the best suburb in the hills? What are the good public schools in Castle Hill? People reply. So they've sort of made it like a social thing. It's got agent finder, rent. It's got other data that you can use. This is a site called communityindicators.net.au. Now I'm not sure if this covers any other state apart from Victoria, because at the moment it just shows Victoria. So this is like a well-being report. So it'll tell you self-reported health was measured in 2011. They haven't got any updated data. So they're telling that people who live in this area, 75.4% of them are well. So this is another site that you can use to figure out. REIV, we've already discussed this site. My Boot is again another site that talks about all the suburb profiles in Western Australia and everything. You just click on the state of what it is, and then you can scroll down and select the suburb that you want to select, and it'll give you the details, distance from various places. So as I said, all of them are usually picking up data from different places. Now I quite like this website. If you are in any suburb, let's say 3192, 3196, which is Aspendale, Edithvale, so I'll just put Aspendale and I select units because that's what I'm developing, and it'll give me, okay, the DSR score, which is the demand supply ratio, is 36, and I can then click on suburb stats and look at the typical value. Don't worry about typical value because it means nothing really. It's got 67 days on the market, which is fairly low. As I said, greater than 90 means that it's a no-no. Vendor discounting is about 5%. Auction clearance rate is about 83%. And you can put in any details. So it's called boomapp.com.au, and it gives you the DSR score, which is the demand supply ratio score. And the rental yield is 3.2. Stock on the market 5.28. That means it's fairly low, not 10%. Online search interest is 291. 291 to a property, which is pretty good. Vacancy rate is under 2%, which is also pretty good. And proportion of renters is 19, which is again pretty good. And there's no this thing that why I am in this area, because I follow what I teach, and that's how I pick up these things, and that's where I want to be. You can also click on their hotspot finder. So when you click on it, you select, okay, I want to move between something that sells for 600k to, let's say, 900k, and you select the DSR score. Let's say from at least, I want it to be at least 20, and you select your state. So let's say in this scenario we will select New South Wales, and I can go continue. Okay, it found more than 500 records, so maybe what I need to do is push this up to 25 and push this up to maybe 660. Again, every time I come back here, I've got to change the states and everything, so I can go continue. So okay, it finds all these suburbs based on their details. So you've got locality, you've got dwelling type, unit or home or house, typical value, and the DSR score. So if you click on anything, you can get the lowest one, and you can organize them from highest to lowest, and have a look at them. And you can do that for every state in this site. So days on the market, so it'll quickly compare that for you. So see, Colorado, it says really good. Days on the market is 19. We've got Neil from Sydney here. I'm not sure if Neil, can I unmute you and ask you some things about Sydney, and if you could tell me if this site is any good. Okay. Okay, his mic doesn't come. Okay, Neil, you're on air.
Yeah, thanks, mate.
So, what do you think, Neil? The Colorado suburb, is that pretty good?
Yeah, Colorado's a good suburb. It's on the beaches, and on one side is a bit more of a cheaper area, being like Dewey,
Yeah.
where there's a bit of housing commission, but it's being gentrified. Supermarket, apartment buildings, etc.
Yeah.
And Colorado is probably on the higher end. There's a lot of change going on in that area.
Okay, and that's probably one of the reasons that the property is very hot, because it's telling us that the days on the market is about 19 and auction clearance rate is 92%, and so which
whilst Colorado is still quite an expensive suburb, in comparison to the inner suburbs, it's not as expensive. And the Northern Beaches is the only part of Sydney that doesn't have good transport links.
Yeah.
So they're proposing some new transport links to Colorado, and I think that's what's going to do the change.
Yeah. So would you, if you were to do a development there, would you consider it a good suburb?
Yeah, I would. The only thing I would question is the values. It seems a little bit low.
Yeah, look, I don't go with the typical value, because their typical value is very different.
Yeah.
Is very different. So what we want to do is get some kind of an indication of what's going on in the suburb, and whether or not we want to find more information on it.
Yeah, definitely a good suburb. I would definitely consider it.
All right, no worries. Thanks so much, Neil.
Thanks.
Okay, this is another site that talks about DSR data, which is the demand supply ratio, and this site's probably wants a bit of money, but you can create like a free login and password here, and look at different vacancy rate, yield, auction clearance rate, average vendor discount, days on the market. Now, I have not really spent a lot of time on this website, but it has the same sort of data that the previous site had. And if you ever wanted to compare it, you just have to see which one is telling you the truth. But from the looks of it, it looks like this site is not maintained properly. Looks like somebody made this website in 1980s and then never looked at it. But there is another site that's available that you can have a look at. And it could be the other way, because looks might be deceiving. It could be a geek who's put this site together and who's doing really good, but is just not very good at marketing itself, and so on. So that's another site. This is another site that I use called propertyreporter.com.au, and I quite like this site because you can go in here. Whoops. You can go in here and select the state that you want to work with. You can. It's got all the postcodes, different postcodes that you can look at. They also have a. It talks about stock levels. So if you wanted to see what the stock levels are in an area, you can do that as well. You can come back here and put 3105, for example. That was Boolean. Click on it and see what you come up with. You can expand this thing, zoom in a little bit, and it'll give you some sort of an idea. So this, I quite like this website. It has some good data available for to be able to do quick research and figure out what's going on. It even lists some of the recent sales history, something that's on the market for sale, and rental properties and so on, and you can click on different suburbs, and you can select different states. You can click on reports, find out rental yields. You can find out discounted listings. I don't know, nothing shows up in there, but at least it'll give you some indication. So let's say I'm in Victoria, minimum price, I don't know, let's say 500,000, maximum price 900,000, and submit and see what it does for me. Come on, do something. Okay, we'll let it do. We'll move on to the next one. This is a really good website called SQM Research. It gives you a postcode snapshot. There's a lot of free data here. Again, days on the market, exclusive to postcode snapshot. Stock on the market, vacancy rate. It'll give you all these details, but sometimes you gotta pay for it. If you ever had to pay and get a good understanding, and you didn't want to do all this research from the free resources, go spend the $30 and get this for your suburb, and it'll give you gross implied rental yield, asking price, demographics, stock on the market. But again, why spend $20 when you know you can get all the same data for free from different resources? You can click on free property data on the website, and you can click on sold property records, property rental yield, asking property prices, weekly rents, vacancy rates, demographics, everything that we've discussed. You can find out just to get an idea of what the property market is doing. Another website is Oz Home Values. I'll leave you guys to play around with these sites and come up with the data. Now, I really love this site. This site is from China, and sometimes I've noticed that this site has better results or more current results than RP data. I kid you not, I was doing some research in Mordialloc, and I had access to RP data, and I had access to this cheap looking site run by Chinese. They have recently changed the name to KSOE. I don't know what that means, but it had a funny URL. So over here you've got rent price, suburb profile, new home, property report, you just name it. So if you go sold prices and you put in the name of the suburb 3105, most probably you will find that you will sorry, I had to click on Boolean, that this data is pretty accurate. So and even on realestate.com.au, certain sales where they will say contact agent and they won't reveal what it's sold for, you'll see that the price is written on this site. So again, this is free, and you can access it. A really good site. I use it all the time. In fact, this is my #1 go-to site to quickly find out what everything is selling for, even before I actually go to realestate.com.au. So this is what it came up with, between 500 to 900. I think this is just nothing much. Okay, so it's almost time for us, but I'm just going to quickly go back here. So this is what you need to do for all the shortlists that you've made. Minimum 3 suburbs, maximum 5, 6, maximum sky's the limit what you want to do. But what you want to do is validate every signal. And you do that by going through everything that we have learned in yesterday's class and today's class, all the factors that we look at for the suburb, to be able to understand your suburb that you're going to work in better than anybody else in that area. So okay, so what you can do is use technology to your advantage. So create an email address that is not your regular email address, which is like your junk email address or something, but create one specifically for property details and property data and property news that you can go and leave everywhere where all the free emails keep coming to you. Did you know that you can actually go in here and create on realestate.com.au, you could create an account and set up all sorts of alerts for yourself. So if you click on this and you go save property, my property, save searches and alert. So go there and select your target search, and you put in your search, for example, Ringwood East. This is a really old one that I created. You can select the different property types. So I'm looking for house and land. I'm not looking for units because I want to develop something. You can select minimum price and maximum price and click on this, more refinements, blah, blah, blah. But you can actually save this and tell this website that anytime a new listing pops up that matches your search criteria, shoot you an email. So that's using technology. So that's, and I don't use this feature anymore, but when I started off and I was looking for projects every day, I had set up all sorts of filters in this. I had set up all sorts of different searches that I was doing. So anytime any listing that popped up that matched my search, it would send me an alert and I was the first person getting on it. And you can do the same thing with domain.com.au as well. I think you can go there and create your sign-in. I would want you to really play with this. These days you can log in with your Facebook and Google as well. And set up alerts for your criteria of what you're looking for. Another website that I use every now and then is called changedetection.com. So say for example, we had the other site that we were talking about, for example, this one here. Yeah, it was called house.ksoun.cn, which is the same website, which is that Chinese website. So in here, let's say for example, Edith Vale, I type Edith Vale, Victoria, and I go search. So all I'll do is in here is copy this URL. I'll copy that, come to this site called changedetection.com, and over here I'll just, actually this is already gone a step ahead. So this is the main page. So you come back here, paste the page URL, and put the name of your junk email address that you put together to receive all these alerts, and go next. So on this site, for example, if a new search result was added to this website, this site will inform you that they have recently added another sale that has happened in the area that you operate, so that you know what's going on. And I'll tell you why, because when we go into further weeks, you'll see that, you know, you would want to be able to go and start talking to all these agents and everything. And when you go and start talking to the agents, they know what's selling in the market. But if they know that you also know that something's just sold last night, or just went on the market, or came as a listing yesterday, they know that you are keeping an eye on the data, and then you come across as a person who's more serious than anybody else. So set up all these alerts, and you can say that you want the alert once per day, week, month. RSS is real simple syndication. It used to be really popular, but these days nobody uses them because everybody likes to watch news on Facebook. Only send alert if sizable changes occurred. Only send alert if text added or removed. And you can select different parameters that you can use to be able to do that. That's another side. And the last one is, so I wanted to discuss these two. Yeah, the other one is called Google Alerts. But before I go to Google Alerts, there's another site called planning. This site's called planningalerts.com.au, and what this does is, we will discuss this a little bit later again when we are doing our due diligence and when we are getting into town planning and we are zeroing in on the website and so on. But over here, the good part about this is that, say for example, I'm doing a project 230 Station Street. So and I go select that and I go search. So this will tell me that everything closer to my address that I've given, these are different sites that have come into planning or they are going into planning. So you look at, okay, 230 Station Street, the closest one is 27 North Cliff Road, subdivision of land into 3 lots in accordance with the approved development permit plans. And if you wanted to click on it, you could see what they're going to do on the site, how to comment, and and you can put your email over there and create an alert to be able to understand. So you can also get the data and the API from these guys, which is pretty good. And what it will do is this is if you want to build another application on top of it. But what you can do is put in an address and see what planning applications are going in this area. Why don't you put your own house address in here and create a planning alert, have the alert go to your spam email address that you've created for a property, and see every now and then you'll get a notice that people around your house are putting in applications for different kind of applications. It could be even a retail shop putting in an application to be able to use the footpath in some way, but it'll pop up and you'll be able to see it. So that's where we are at. The last alert that I want you to understand is this. Has anybody heard of Google Alerts? Google Alerts, if you go to wikihow.com.au, use Google Alerts. I'll just go call it how to use Google Alerts. So you can go into how to set up Google Alert. There are many websites that will teach you. I think even if you went to YouTube, somebody will have a video showing you how to do it. But this website, wikihow.com, use Google Alerts. It shows you how to create some. So all you do is go to Google Alerts, click on that. And over here you can create different kinds of alerts. For example, these are all my alerts. So if someone searches for my name, I've got an alert that somebody searched for your name. If there's a new station put in, there's a new store or Bunnings that's put in. So if any news article ever published that said Bunnings new store together on one page, you'll get an alert where that is happening. Or new store or Coles, you'll get an alert where that's happening. So these are all different alerts that you can use. I would recommend using New Station, Coles, Urban Renewal plus Brisbane, all different cities. Sorry, my throat's almost gone. And then you've got new shopping center, new school, Woolworth for new schools. Any kind of different alert that you can think of, you can actually put in there. And anytime a news article is published or any website is talking about it, or anywhere these two words come up together, Google will send you an alert telling you that check out this article, this is where it's happening. So that way you would know, okay, this is what I need to look at. So now I think we've come to the end of our session for tonight. I am going to open this planning alerts we've already discussed to Q&A. So if you've got any questions, press your hand button and I will give the mic to you. Sorry, I will unmute you so you can discuss further. Okay, Ashley. Yes, Ashley.
Okay, so these alerts and so on, in the various data that you look at, do you just monitor it and internalize it, or do you have like a fancy scoring matrix spreadsheet where when a score goes above a certain level, then you're interested, or is it more of just internalizing?
No, this is more for me to just keep an eye on where everything is happening. And if, for example, I get an alert where there's a Bunnings store opening in XYZ suburb, it'll tell me that there is opening one. It'll just give me, it's like, I don't have to wait for certain things. I don't have to look for them. But then when it comes in my inbox, I can quickly glance through and say, does that bother me, or am I active in that area? If I'm not active, I'll just leave it. If I know that there is coming up, and if it's happening in the suburbs that I'm doing, I'll be more careful and say, look, we need to get a site in this area or close to this area. There's a Bunnings announced in that area. But there's no matrix as such that I don't get too pedantic. It's you really need to know all this and then go. The main thing is you go and take action on this. So if I spend too much time on trying to get X, Y, this, that, then I won't be able to take that much action. And it has happened with me because most likely when people who are more analytical, they take the longest to take action.
Sure. Okay, thank you.
Okay, anybody else have a question? Anyone else? Okay, Ashley again. Yeah.
Alternatives to RP data. I think you mentioned an alternative to RP data, which also costs money, but you preferred it. What was that?
A real estate investor.
Okay. So that's a paid service, right?
It's a paid service. I think it costs $1,500 or something for 2 years or a year, and for the first couple of years they take the money up front, but after that it falls down to $99 a month or something, and we pay that because the only reason I like it is because it's not as expensive as RP data, and second, it lets me export data into Excel spreadsheet so that I can analyze it the way I want to analyze it. And when we do due diligence next week, I'll show you how I get the data from the site and then I put it on Google Maps and see where everything is at to be able to make a better decision for the particular site that I'm doing.
Okay, thank you.
Yeah. Okay, anybody else who would like to add something to it? Shane, hang on 1 second. Yes, Shane.
Oh, good day, Amber. When you're putting together a report of a particular suburb, what form do you use, or what form would you suggest we put it together? Would it be something like we might be preparing it, to present to someone else in a summary form with stats and graphs, or just a lot of written text in it?
See, sometimes I would just add the report as it is, rather than trying to rebrand it or anything. The idea is to get information, but if you but that's not the report that I'm asking you to put together for this week. What I'm asking you to do is create a simple Excel spreadsheet, and on the X column put in all your 5 suburbs, or put your 5 suburbs on the Y column, and on the X column put all the stats and put all the median income, median age, this, that, all those things, and then fill out that data against each column, and you'll be able to see why what suburb is performing better in certain areas and why it's not. And whatever the reason is, you can put your notes in front of it in one of the columns and say, look, this is doing well because I found out there's a new train station going, or council's doing this, or there's something else happening in that area. You need to find reasons why. And why we do that is because when we go and do a development, we're not coming out of just because we want to do a development. We picked up this suburb, or I found this site, looked really good. It was good, so I moved in there. So it'll give you that extra level of confidence when you move on a site. Otherwise, it'll be difficult for you to move on a site. But if you've already gone through and done all of that, and you come up with ABC suburb, and you know why you came up with that in the first place, you'll be less scared taking that decision to the next level, where you can say, I'm confident because that suburb has this going for it, that suburb has this XYZ going for it, and it ticks all the boxes for me. So I know that, so when you hear all this negative media, people freeze. They can't move. and the only way it'll help you move is if you've done these exercises and you base your decision on actual facts that you've gathered.
Yeah. Okay, thanks.
Yeah. Okay, anybody else would like to ask a question? Okay, it's what time is it? Okay, it's almost 9 o'clock today, and I hope you guys have a good night, and I'll post this video by tomorrow morning in the group, and I'll see you next week. And next week we are doing due diligence, and I may have a surprise for you, or may have an announcement for a surprise for you in the following week. So yeah, all right, I'll see you guys next week. Thank you very much for joining today.